Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 2nd of June 2021. Alright everyone, let's get into it. So I came across this thread on Twitter, I think early this morning, maybe late last night, from Pentoshi here, who is a trader. Trades all kind of coins here, but I think they put together a really great thread about kind of what's happening with ETH at the moment in the markets. Now, I'm not going to give like a whole market overview here. We all know how it's been going, right? It's been going sideways for a little bit after the crash that we've had here. But I think that, this thread from Pentoshi and there's one from Lars that I'll go through in a sec, really show kind of, I guess, the changes that are happening for ETH, specifically against Bitcoin. Now, the first kind of tweet here is about like the chart structure, which I won't kind of talk about. I mean, everyone has their own kind of opinion on technical analysis and things like that. And he's comparing it here to, this structure here, the Livermore's speculative chart, where he's saying that ETH is at number 5 on this. You can see on the left-hand side there, number 5 is quite low. And, he's obviously predicting that ETH's going to go a lot higher than that. On the ETH Bitcoin ratio here, not ETH USD, I should say, sorry. But then he goes into kind of like, I guess, comparing a lot of the stuff that I've been comparing on the Refuel for the last few months is like, who's doing more fees? Obviously Ethereum. A lot more fees. There's more demand to use the Ethereum network. The Ethereum network is moving a lot more money than Bitcoin is. It's settling a lot more value than Bitcoin is. Trillions of dollars a year now, which is quite insane. Here, OTC desks as well are seeing more kind of like demand for ETH over BTC at this point in time. And ETH still has very bullish market structure, according to Pentoshi here, which is something that I've been noticing too. If you actually look at what happened over the last few weeks, and you look at the crash and the recovery from it, the ETH BTC ratio fell down, right? But it also went straight back up to where it was. So it went down to, I think it went from 0.08 to 0.055, bounced off that and settled at around 0.072 at time of recording. So pretty much like, it dumped with the rest of the market, but then went back up. And ETH has just looked a lot stronger than Bitcoin has over the, I guess, like even the last few months, you can count that because of the fact that ETH has been outperforming Bitcoin for quite a while now. So, and I think the crash was definitely led by BTC. It had looked weak for quite a while. Institutional inflows seemed to have stopped, and it was getting like a lot of headwinds with the ESG narrative and stuff like that. So I think that definitely comes into it. And then Pentoshi goes on to say that people and companies like Goldman Sachs and Raoul Pal are saying that they see more utility with ETH and there's more upside in ETH. Obviously, he talks about 1559 here, and then goes on to say, there's clearly something happening here. And, if you kind of like step away and look at the big picture, you'll see that, right? And I think, on this note as well, is also this tweet thread from Lars from the block here, who went through, what metrics ETH flipped BTC over in just May alone. So the total kind of like, I guess, adjusted on-chain volume for ETH increased to a new all-time high here of 1 trillion just for May, which is quite insane here. And obviously Bitcoin's kind of in there as well. But ETH is doing more than Bitcoin here. Now, we went on to say that adjusted on-chain volume of stablecoins also increased by 51.9% to a new all-time high of 766 billion, with obviously most of that settling on Ethereum here. Miner revenue, ETH's miner revenue is obviously up, which to me I actually wouldn't say is a positive because it's the fee revenue going to miners. I would say that this is like a positive for what's to come. Obviously with 1559, most of these fees would have been burnt, so that actually goes to ETH holders essentially. And ETH captures that value. The most interesting things are things like the legitimate centralized exchange volumes, I think, where, you would have seen, I think I spoke about this on one of the refuels, that ETH has kind of like been consistently higher or at least like equal to Bitcoin's volumes on centralized exchanges, which is another kind of market structure thing that's been changing lately. And daily kind of average volume of Grayscale's products, I think he's showing GBTC here. It's kind of like stabilized, but I think ETH is getting more inflows here. Futures volume as well, and ETH futures have obviously exploded since the CME futures went live there. And the real story is on the derivatives front. So options for ETH have been kind of exploding here. You can see ETH in kind of like the reddish color here against the blue purple color from Bitcoin, which again I think should be flipped here. But anyway, you can see like how it's been gaining, and it's just been quite and this kind of like green or turquoise line here shows the ETH BTC percent percentage as well. So you can see that as ETH BTC keeps going up, a lot of these other metrics kind of follow it. And I think these other metrics are basically obviously following it because, you can see the demand play out in the markets for ETH over Bitcoin. Like, more people want to buy ETH than they want to buy Bitcoin, and people are trading their Bitcoin for ETH. And that's going to play out in all these other types of markets, whether they be exchange volume or derivative volume, on-chain kind of metrics for Ethereum. Ethereum has had more fees on its network for, I think, a year plus now. It's been settling more value than Bitcoin for almost as long as that. And we're just seeing like all of these flippenings happen. Now, I spoke about this on one of the refuels, I think, a couple of weeks ago, and I wrote about it in the newsletter, where really the only flippening left is market cap at this point. And I think it's going to happen sooner rather than later. I don't think it's like an if, for most people anymore. I think it's a when. People expect it to happen. Even the people that I wouldn't have expected to expect it to happen are definitely kind of up there on that list. And I think the only people who are denying that it'll ever happen are like the most hardcore kind of like Bitcoin maximalists, who I regard as being a complete minority at this point in time. You can see like even the middle center of the kind of like mill Bitcoiners definitely can see a flippening happening and have changed their tune a lot on ETH and Ethereum over the last, particularly over the last year or so since DeFi has exploded. So it's really great to see, I think, this growth. I think it's healthier. I really do think that Bitcoin has been holding back this entire industry in terms of on the technology side, and it has been giving this industry, I guess, like a bit of a bad name as well, because people just see Bitcoin, they're like, okay, well, what can you do with it? And, obviously there's use cases there and everything like that. But those use cases like digital gold or an inflation hedge don't appeal to most people. Whereas ETH as an asset and Ethereum as a network appeals to a much broader set of people. So from that perspective, to me, Ethereum flipping Bitcoin has always been inevitable, but it's great to see, more of this kind of happening here. And I'm not going to give a timeline of kind of when it's going to happen. I don't know exactly when it's going to happen. I do strongly believe with everything that it will happen. That's why I've held 0 Bitcoin for a very long time, because why would I hold Bitcoin when I expect ETH to overtake it and keep, going beyond that? And I've also spoken about in the past how I think that flipping Bitcoin is just like one kind of small, I guess, victory. The kind of big battles are with centralization and kind of like centralized finance in general, and DeFi and Ethereum becoming the new kind of global financial system that is, fair, decentralized, neutral, and not be able to be controlled by a central party. That is the real kind of target. Bitcoin is literally just like a small kind of stepping stone, or flipping Bitcoin is a small stepping stone on the way to that. But I do think once ETH does so, it'll make the industry a lot healthier. And it'll make the industry kind of like viewed at least a bit more legitimately by the outside kind of world here. So Vance Spencer had an interesting tweet today about different L2 solutions and what kind of like heterogeneous L2 kind of world looks like. And he said that he thinks it's going to be bullish, because it creates modular, distinct subcultures that can be bootstrapped by protocol incentives and form-fitted to use cases across consumer, DeFi, and enterprise preferences. Diversity is the spice of life, and trade-offs are meant to be explored on ETH and Ethereum here. I totally agree with this, and this is exactly what I've been saying about L2s and different scalability solutions for Ethereum over the last, I guess, few months, is that we're going to have a bunch of these different ones that all come with their own kind of trade-offs. There's going to be different things built on them, and that's going to be totally okay. That's going to be very, very healthy. This is the Ethereum ecosystem at its core. It's rapid experimentation. It's doing this on a bunch of different with a bunch of different tools, and kind of eventually getting to a point where we settle on like a handful that we think are very valuable and work very well. But during kind of like, I guess, the early phases of this technology, it takes a lot of experimentation. I mean, if you look at early DeFi, there was a lot of stuff there that didn't really work out. There's a lot of stuff during DeFi Summit that didn't work out. And, I would say that early DeFi is funny because I think we're still early DeFi. But if we were talking about like, the day zero of DeFi, like the very, very beginning of it, it took a very long time for things to kind of grow and happen in terms of like, adoption here. I mean, from MakerDAO to DeFi Summer was what, 2.5 years, and that's from MakerDAO going live on mainnet. Whereas now obviously things are happening a lot faster, but it's still a lot of experimentation going on. There's still a lot of apps that will fail over the long term. I think we do have some of our Googles and Amazons around already. I do believe that MakerDAO is definitely looking like an Amazon or a Google, for instance, like something like Aave as well. Uniswap obviously, but I think for most projects out there, it's still like not a sure thing. I believe so. We're still seeing a lot of experimentation there, but L2 is just going to like blow this wide open. We're going to be able to have literally anyone in the world be able to deploy contracts extremely cheaply to these solutions, and be able to build whatever they want on them and tap into kind of like the amazing kind of stuff that you can tap into on layer 1 just without the costs. But on top of that is also the speed, because on layer 1 you're limited by a few different things, right? You're limited by the 13-second block time on Ethereum, which is faster on these L2 solutions, and because of that you're limited to what you can actually do. Like, you can't do high frequency trading on layer 1 Ethereum. You can't do order book exchanges on layer 1 Ethereum. You can technically do it, but it's not feasible. It's very slow. That's why you've seen things like dYdX and Diversify and Loopring and that on L2, because it just doesn't work on layer 1 at scale. So from that perspective, we're just going to see like an explosion, a Cambrian explosion of stuff happening at layer 2. And it's really, really good that all of these solutions are heterogeneous, where they've got their own trade-offs, they've got their own differences, idiosyncrasies, they've got their own, some of them have their own ways of doing things. Like, on Optimism, you have the OVM, the Optimistic Virtual Machine. On Arbitrum, you have the AVM, the Arbitrum Virtual Machine, which aim to be EVM compatible, but still have their own kind of like quirks to it. You still have to do certain things, and kind of like, when you're kind of like building on these layer 2 solutions, it's slightly different than building on layer 1. There's different kind of stuff happening on there. Both, I guess, like, I wouldn't say it's necessarily good or bad. I mean, there's a lot of good, right? And there might be some bad, but it is what it is, right? That's how you kind of like build on these solutions. And we've seen this play out with things like Polygon as well, right? Even though that's, I guess, what people wouldn't consider a true layer 2 solution, the POS chain, it's still something that has allowed for rapid experimentation with a lot of things. I mean, I read somewhere today that to deploy contracts to Polygon is like extremely cheap. I think it costs like under $1 to deploy a bunch of smart contracts. On Ethereum, that would cost thousands of dollars to do. And obviously there are trade-offs there, right? There's security and decentralization trade-offs and stuff like that. But still, when you're doing like rapid experimentation and innovation, a lot of this stuff already has like centralization vectors, especially a lot of DeFi still has admin keys and things like that. So yeah, I really agree with this tweet from Vance. I think that people are missing the forest for the trees if they kind of like think to themselves, why having so many L2 solutions is actually bearish. It's just going to fragment everything. The most hilarious thing about that is that for the longest time, people said that Ethereum's layer 2 ecosystem would amount to nothing. We would get nowhere with it. There was too much kind of like, alpha kind of test nets and not enough mainnet stuff. And now we're getting to the point where we're going to have Arbitrum and Optimism, ZK Sync, Starkware, and people's kind of like individual, companies' individual instances of things like Loopring, all of these kind of things happening at layer 2 that people are now saying, well, there's too much, right? It's just funny how these narratives work. And, this reminds me of another narrative where people are saying, oh, high fees on Ethereum are bearish, and now they're saying that low fees on Ethereum are bearish. Like, make up your mind. Like, I know it's not the same people saying these things, but it's really funny how you see like the kind of like the narrative wars. And I spoke about this the other day, how the narrative wars are basically unwinnable because you're fighting against people who have not used kind of like reason to get to their point. There's a famous quote, I think, from Neil deGrasse Tyson. I don't know if he came up with it himself, or if he took it from somewhere else, but it basically says like trying to reason with someone about something that they haven't reasoned themselves to get to the point that they're making is a fool's errand, because you're never going to be able to reason them out of that point. So from that point of view, like for me, when I see people saying, oh, low fees are bearish for Ethereum, high fees are bearish for Ethereum, I just think to myself, well, in actuality, according to the data and according to the actual hard facts here, high fees are, bullish for Ethereum if they're in aggregate. High individual fees are obviously not great because it prices out end users, but high aggregate fees, as in the total amount of fees being paid on the network, especially post EIP 1559, is extremely bullish for the network. So you can hold both points, but you have to back it up with kind of some reasoning. You can't just say these sound bites for some kind of like Twitter engagement and that's it, which I think is what a lot of people try to do. But anyway, I'll leave it at that for now. I just thought what Vance, the way Vance put this in his tweet here was very effective, and it really kind of spoke to the way I've been thinking about these things as well. So you may remember a couple of weeks ago, I kind of gave a shout out on the Refuel that Trent Van Epps was kind of looking for people for this new core dev apprenticeship program that the Ethereum Foundation seems to be heading up here. And he put out an update today that they had received over 400 applications, and the applications are of course now closed. This is amazing. Over 400 applications for a core dev position, or like for multiple core dev positions, which is crazy because, for those who don't know, being an Ethereum core dev is no easy task. It is definitely one of the more complex things to do in this ecosystem because you're doing a lot of low-level programming. You have to have a lot of experience doing this sort of stuff because you're basically developing software to manage a network worth over $300 billion and a network that settles trillions of dollars of value a year here. So it's just really great to see this. Now, of course, of those 400 applications, maybe only a very small handful, maybe like 5 or 10, and even that's pushing it, will become core developers, or at least become people who work within the core developer sphere. But that shouldn't discourage people. I mean, if you apply to this and you don't get chosen, I don't think that should discourage you from trying again or keep trying to level up or joining another team or whatever. Generally, if you think and you're confident enough in your ability to be able to become a core developer, then really you should be confident enough in your ability to become like a developer for a DeFi app or a DAO or any kind of app building on Ethereum, because these developers are in short supply generally. I think everyone in this ecosystem is in short supply right now, whether you're a developer, marketer, business developer, whatever you want to call it, but especially like Solidity developers and things like that. I have people contacting me all the time about this. Definitely, if you don't make it into this, if you've applied to it, definitely go check out another project there if you want to. But yeah, I'm curious to see who makes it as part of these applications. I'm not sure exactly how this is kind of being run, like the nitty-gritty details, but I'm sure we'll find out more as time goes on. But it's really, really cool to see that 400 applications or 400 people applied for this position here. So speaking of core dev related stuff, Eric Connor put out a really great tweet today that basically summarizes my entire view on what I'm excited about, kind of like with Ethereum. But he said, the 3 things I've been most excited for in Ethereum's history are happening within the next year. These obviously include EIP 1559, Layer 2 launch and adoption, and Ethereum running on proof of stake. Ethereum in 22 is going to be such an enjoyable experience. Now, the one thing I would add to this as well would be sharding, maybe as part of like the proof of stake kind of thing here. So you could call that like the ETH2 rollout. But generally, these are the 3 biggest things that people are excited about in this industry. EIP 1559 has been a thing since April of 2019. Since that EIP was first proposed. Layer 2s have been a thing, since very early on, before even Ethereum was a thing, because Bitcoin had Layer 2s of, ideas for Layer 2s kind of swinging around there. But Layer 2 on Ethereum has like a rich history. We had Plasma and state channels, which are still used today, but obviously we didn't have rollups for, most of Ethereum's life. Rollups are relatively new compared to those 2 things there. But it's all coming together. Obviously, we have a lot of things going live on that front, and Ethereum running on proof of stake has been the dream since the white paper was essentially published, in late 2013. And that finally went live December 1st of last year. But in saying that, that was only halfway there. We want to go the whole way there, which of course is doing the merge, getting ETH1 into ETH2, getting off proof of work completely, and having a full proof of stake Ethereum. And as I said, I would add sharding onto this because I think that sharding gets us to where we want to be in terms of scalability, because it will enable layer 2s to achieve scalability of 100,000 plus transactions per second by using these shards as data availability layers there. So, the funny thing is Eric's my co-founder at ETH, for those who don't know, so I'm pretty close friends with him. But he's been involved in the Ethereum ecosystem for much longer than I have, pretty much since day one. I'm pretty sure he invested in the ICO, or at least close to it. For me, I've been in since early 2017. So for him, like 2 of these things, L2 kind of launch and proof of stake, he's been waiting for since, I would say, like 2014, since the ICO here, which is 7 years. Like mid 2014 was the Ethereum ICO. We're coming up on mid 2021. That's 7 years there that he's been waiting for this. It's a very long time. And I sometimes see people kind of, I guess, like having a go at Eric, that he's being a little bit contrarian on Twitter, or being a little bit kind of like bearish or whatever. And I kind of think to myself, guys, he's been around for like 7 years now. He's not being bearish. He's just like at this point where he's been around for quite a while, and he's like, taking a little bit of a break. He recently had a kid and things like that. So I think when you've been in one industry for so long, especially crypto, because it moves so quickly, and if 7 years would feel like decades. I mean, I've been in for 4 years at this point, and it really does feel like decades have passed. So yeah, I totally understand kind of like where he's coming from, because it would feel like an eternity since he got into Ethereum because of things like proof of stake and kind of like I guess like programmable money and layer 2 adoption and all that sort of stuff. And he's one of the co-authors of 1559 as well. So, and he's been waiting for that for 2 years at this point too. So I think when you take all that, you can kind of see, kind of like how he would feel on these sorts of things. But it's just funny when I see people kind of saying this stuff on Twitter. But anyway, I guess the main point here is that all of this stuff is happening within the next year, as Eric mentions here. So by this time next year, if all goes according to plan, 1559 will be live, L2s will be in full swing and being adopted in a really big way, and the merge will be done. Can you believe it? In the next 12 months, in the next year, this is what Ethereum is going to kind of look like. And sharding will hopefully come in 2022 sometime to really enhance that L2 scalability as well. We are so close after so long. I don't know how long you guys have been in the ecosystem for. Me, it's been 4 years, obviously. That I just said that. But even if you've only been in for a few months, I'm sure you hear about these things all the time, every day. I mean, I talk about them on the Refuel a lot, and it might feel like an eternity to you, but just imagine what it feels like for Eric having waited 7 years, and even for someone like Vitalik having waited from I think December 2013 was when the white paper was published. So 7.5 years. It'll be probably 8.5 years by the time Ethereum finally does the merge. So yeah, it's pretty cool to see this all coming together, and it really shows that a lot of this stuff is a marathon and not a sprint. A lot of the core developments for Ethereum and even the application layer stuff is definitely not going to happen overnight, even though the markets can get ahead of themselves and hype can get ahead of itself. I mean, 2017 was a pure example of this with ETH, where the expectations and the hype and everything got totally ahead of where the fundamentals were, and that's why we had such a massive run up. And then obviously once people discovered that the emperor kind of had no clothes yet, the emperor was getting clothes, but maybe in another 2 to 3 years, then the kind of the market cooled down. But I think we're at the point now where ETH, as I was saying before, ETH looks a lot stronger than Bitcoin, and I think that's in large part due to its fundamentals just being so incredibly strong at this point in time, and so many major catalysts coming. I mean, 1559 and the merge are two of the biggest ones, but I think the L2 continued adoption, the continued adoption of DeFi and L2 launching and adoption and actually being real is going to propel Ethereum even further there. So yeah. I'll leave it at that, but still very, very cool to see what's going to be going live within the next 12 months on Ethereum. Speaking of layer 2, dYdX has crossed the $2 billion total volume mark on their layer 2 perpetuals exchange here. You can see this nice chart that shows that essentially they've been growing really, really quickly here. I mean, I've talked about dYdX a bunch in the past. I remember saying to you guys that I expected them to be doing billions in total volume sooner rather than later. And this is about, I think 6 weeks since they kind of like launched onto mainnet here, or at least opened up to kind of like a public mainnet here, which is really, really cool. And then on May 19th, they did an all-time high volume of 159 million. I think May 19th may have been the crash that happened, and dYdX seemed to have handled it really well as well there. So yeah, I guess congrats here to dYdX for showing the way with layer 2. They are obviously one of the first apps to be live on layer 2 to be doing really great volumes with a really great product. So I am really happy to see this, and I just can't wait to see the continued growth here. There's going to be so much more of this coming. The stats are going to be insane. I think everyone's going to be blown away by just how quickly this stuff can grow, especially something like a Uniswap, as I've been going on about, which will be on Arbitrum before Optimism by the looks of things. But maybe Optimism has a trick up their sleeve. Maybe we'll see Uniswap on Optimism before that, but we'll see. Who cares? For me, it's like just get onto a scaling solution for these apps. Like, please, like look at the success of Aave on Polygon. Billions of kind of like dollars on there as well. So, these apps kind of like, I guess, sitting around waiting for things to happen, make them happen. Deploy your app, get that growth, because it's there if you want it. So Eric Stone, who works in data science at Flipside Crypto, announced that his Uniswap calculator is now up. So this new calculator is basically built on V3, or at least built around V3. Sorry, I should say, and allows you to kind of like do a bunch of calculations if you're a liquidity provider. So you can kind of like do price assumptions, like where you think the price would go within a kind of like range and things like that. Set your liquidity bounds, like what you want to provide liquidity between. If you want to provide liquidity between $2,000 and $2,500, you can do that, and it'll show you exactly what the distribution kind of looks like and stuff like that as well. And you can kind of like select when a date range for swaps and things like that. So basically, it lets you play around with all this stuff before providing liquidity on Uniswap V3. And I think this is a really, really valuable tool because I have a few friends right now playing around with Uniswap V3, and it's actually incredibly powerful if you know what you're doing. Like, if you know how to manage your position correctly, make sure that you stay within the ranges and do it like a very tight range, you can capture a lot of the volume in that range and essentially be making like really high returns on it. But the risk is obviously that the price goes in and out of your range, before you can actually adjust it, which kills your kind of like gains there, because then you're stuck in one particular asset. So from that perspective, I think that if you've got these kind of tools available at your disposal, you can make a bunch of assumptions and try to see like what your kind of returns would be at what kind of range, and assuming that the price goes up this much, like how much time do you have to kind of exit these positions and reweight or whatever you want to do here. So yeah, I really, really think this is a cool tool here from Flipside Crypto. So if you haven't checked it out yet, it'll be in the YouTube description for you to do so. So PodsFinance here, which is a options protocol, has released their demo on 0x Polygon. Now, I think Pods is definitely building on Ethereum as well, but it's cool to see them launch their demo on Pods first here. So they had their beta test running on the Kovan Ethereum testnet and the Mumbai Polygon testnet here, but their demo essentially has gone live on kind of Polygon first here so for you guys to experience this. Now, as I said, this is an options protocol. If you don't know what options are, don't know how to play around with them yet, and want to get more involved with it, you can. There are definitely a lot of guides out there. I'm pretty sure the Pods team has guides here as well, and like a step-by-step guide on how to kind of interact with Pods on Polygon too. So if this is something that you're interested in, definitely go check it out. I mean, there's a lot of options protocols out there these days. Off the top of my head, I can think of a few of them like OPM and Open, obviously Pods. There's a few others like Hedgic. I mean, there's lots of them now actually, and I don't know if any of them have really taken off in a big way yet and sustained that growth. But I think that might be because they needed like a layer 2 solution or a scalability solution here. So I'm excited to see kind of like how this options protocol goes on something like Polygon, and maybe excited to see them kind of deployed to other, I guess, like scalability solutions like rollups in the future. So definitely go check them out. I'll link this in the YouTube description. So last up here, we have a tweet from Whale Alert, which basically said that a dormant address containing 310 Bitcoin worth $11.3 million today had just been activated after 9.7 years. So this Bitcoin was only worth $1,894 in 2011. So this is the first time it has moved in 9.7 years, which is really insane when you think about it. Because you can kind of think about, okay, how did someone, come about this? Like, why did they move just now? Was it because they remembered their password to their wallet, as people saying in here? Was it someone who was just like, finally, maybe I'll just move this on chain to cause some waves in the ecosystem and get some publicity? I don't think anyone has publicly kind of shared that this is them, but it'd still be fun if you were the person controlling this to see like crypto Twitter going nuts over this. Was it stolen, by someone? Did someone's, seed phrase get kind of like, for their wallet or whatever, the original wallet in 2011 get stolen or something? Has this got to do with law enforcement? Because law enforcement in the early days definitely seized a lot of Bitcoin, especially from the darknet markets. But there's a bunch of theories people are putting in the comments here. Woke up from a coma, or maybe someone went to jail, right? You could imagine that you went to jail. And there was actually someone, Fiscantus on Twitter, he posted that a kind of like a joke where he said that, oh, this person got out of jail and they stored their private key in a Bible that was given to the prison once they went to prison, and they got their Bible back once they left prison, and now they're kind of reviving their account here. Could you imagine if that was real, that this person had been in jail for almost 10 years and then they get out and have this $11.3 million windfall, from these Bitcoin they may have mined early on, or just like bought early on in 2011 here. So quite insane to think about like exactly where this kind of came from. And it's always fun to see like these really old coins moving around. I'm sure we're going to see a lot of this in the future on Ethereum. Ethereum, launched on mainnet mid 2015, so it's only almost 6 years old at this point. But there are coins that I've seen that are on chain that have been dormant for over 5 years now. So those coins would probably belong to people who lost their kind of seed phrase for their original ICO wallet, or people who just don't want to move their coins because they don't need to. They have multiple wallets and they don't need to move their deep cold storage because they just like want to hold their ETH forever. Or it belongs to kind of like original exchange cold storage addresses. Like Kraken was, I think, the first exchange to list ETH, so they may have some reserves that they've never moved from the deep cold storage there. There's a bunch of reasons why coins don't move, but it's always cool to speculate on it and kind of like come up with stories and try to like guess why. And for most of these movements, you never really know the real reason, but still, it's fun to speculate. But anyway, that's kind of like what I wanted to talk about with this tweet here. I think I'm going to leave it at that for today. So yeah, thank you everyone for listening and watching. Be sure to subscribe to the YouTube channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.